SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Still got a little bit of a raspy voice here, so a bit under the weather, a bit of a cold still. But to be honest with you, I think when I'm at this level of, I don't know, cold or whatever it is, it gives my voice a little bit of depth. So maybe if I have time, I should start reading out audiobooks or something like that. I do feel as though there is a quality that's added to my voice when I get this poorly. Never mind. The situation with Bitcoin is still relatively simple, same as it's been for ages really. We've got this basically a middle zone really. We've got to either reclaim it or just prove that resistance is still the main key. Obviously, you know, when dealing with trend and momentum, we have to respect that the overall trend is still certainly one of a downtrend. Can't dispute that. That's definitely still the case. As we come down to settle around this zone now, since we've been down here longer than any other area in this bear market, you know, this is the longest time we spent around here. It does give us, I suppose, a little bit of hopium to suggest that this could, it doesn't necessarily have to be the bottom, but it could be an area for where we launch maybe towards the top of the Bollinger Bands or so, maybe even overreach up into like 29 or so if we do decide to break to the up. But for the moment, obviously with a trend that is so significantly down, we have to, I suppose, have a bias of the trend. You know, the time old saying, you know, the trend is your friend until the end of the trend. Well, this is the trend, so let's just respect that. But all trends come to an end, and there will be certain telltale signs that that is the case. And on the daily, we don't really have too much to go by outside of a bit of divergence, which again is divergence on more or less like a flat area. So it counts for something, but it's not an area where you'd say, right, okay, let's go in and tackle this. We could probably say that, you know, if we do continue to go down and break down into lower, we'll be looking for a decent bounce, if anything, from maybe another level lower than this. But again, that's none of that is written on this chart right now. The simple situation is basically a matter of support stroke resistance, and Bollinger Bands are also getting a little tighter. I mean, they're not extremely tight, but on a daily they're quite tight. This is the tightest they've been in a little while, and we can look back in the times that we've been in these zones like this, that when the Bollinger Bands do start to contract like this, certain moves do become possible. So Bollinger Bands contracted a little bit here, volatility came to the downside. Well, Bollinger Bands contracted around here, and actually, yeah, the price action moved to the upside. So this is the tightest I think we've seen them, 7%, you know, 7.3% from the bottom to the top. This is the tightest we've seen them on a daily, as far as I can see, in this entire bear market, which suggests to me that a big move is likely to come relatively soon, maybe as soon as this week, maybe next week, maybe even later on today. There's no real way of telling specifically exactly when it's going to come, but historically, throughout this last year period, this is the tightest that they've been. So, a simple rule would be, for me, anywhere below this box still has very much more likely to break down to the downside if we start to reclaim at least the beginning of this box, which would be above the 20s simple moving average, so the Bollinger Band center and the 20 exponential as well, and also getting ourselves back within the box. Then there is every chance that we start to move up, and then maybe the volatility expands to the up. All of this is not just a Bitcoin problem. This is a Nasdaq problem, it's an S&P, it's a Dow Jones Industrial Average problem, it's a Dixie problem, and with that we'll just have a quick look over at the Dixie, which again, if we just follow this major trend, which is, it's definitely something to reference, you know, it's not nothing. We have this 22-year trend, an ascending channel, which, you know, when they do break down, they break down fantastically really, but this is a weekly here, and we've got 22 years within it. We are at the top of it. Each time we've seen these moves to the top, we come back down to the bottom, up to the top, down to the bottom. We are at the top here. Doesn't necessarily mean we're going to break down to the bottom. Even if we did, we'd still be another higher low. So, you know, dollar still very strong. It's in America's interest really to continue with a relatively strong dollar in the short term. If it gets too strong, it stops America from being competitive in global markets, which again, at this very moment in time, is a problem for them already. It would be an unbearable problem if we did break out above 120. I think they would step in and try and sort that problem out themselves at that point. But for the moment, I suppose this is the intention, and we shouldn't really try and fight this trend. If we break out from here, it would be a breakout. It'd probably go for a parabolic move up, and then that would probably be it. We'd see a peak. I don't think we'd see much higher than 120. I think we'd probably peak around there, have maybe a blow off top. That might be in the form of an entire market crash. That sort of thing happened in 2020, didn't it? There you go. Pop down. It's that sort of thing that we could start to see again and again, but that would be in the form of a market crash. We'd have VIX above 40, probably above 60. We'd have a big spike in dollar, and then basically a bear market for the dollar. To be honest, a bear market for the dollar. But for the moment, yeah, we're getting a rejection once again on that level from last week's closure. And so maybe we could look at this on a weekly and expect another retest of the 10 exponential, which would be only a little bit further down from where we are right now. This seems to be the movement of the Dixie on the way up, all the way up, down, 10 exponential, rides up, touch up, touch up, touch up, touch up, touch up. So maybe we do that once again. We could also look at it on a daily at that point as well, and recognize that maybe actually this is a consolidation of its own. I think that's quite unlikely. 50 exponential coming in, and again, this is just a daily. 50 exponential at the moment is coming in at 110.40, so a little bit lower than the 10 exponential, but obviously as a daily moving average is going to creep up bit by bit by bit. So there is a chance that we actually come down to test, something like 111 on the Dixie, which would have some upside on, well, basically everything really. But it's not enough to expect a breakdown. Again, fighting the Fed is the main thing, and we recognize that that's something we shouldn't do. So with Bitcoin, like I say, it's very simple. Below this area, no good. Into this area, encouraging. Above this area has every chance of continuing. That area being 19,750. If we're above there, then we should expect a little higher than that level. Maybe even going into an uptrend, as we see on the 4-hourly. Just as we've seen the Bollinger Bands contract on the daily, the 4-hourly has all these moving averages converging into one. I like to call it the proton pack, and this is where we basically see what would either be considered to be an accumulation or a redistribution in weighting, where moving averages basically don't give any edge at this point. And this can be encouraging, especially in something like a bull market. Or again, coming out of a consolidation, go into an accumulation in a long period of time. You look at something like this and go, okay, let's look for divergences on the higher term time frames now. Let's have a look to see if we can get any signals on the Ichimoku cloud, and at the moment there is none. There is divergence on the higher term time frames, but that's not enough. If we get a buy signal, at least on the 4-hourly, it can encourage a move further up into the 20s and so on. But for the moment, we're not going to get that until price action gets out of the cloud, and the Chiku span, being a lagging span, needs to break above, look, 19,700, the box of interest. So closures above 19,700 or higher would incur a nice Ichimoku cloud pump signal on a 4-hourly. It would also be pumping above your 200 exponential, which is hanging around in the middle of this zone, which again is a good place to be moving from. And this could start a chain of events where we actually start to see the volatility expand to the up. But for the moment, being below all these moving averages, including the box of significance, which is what I like to crown it as, with no buy signals, we have to respect that the trend is still focused to the downside. So I would just focus on this little area of price action, really. 19,500, 19,750. It is pretty much as simple as that. On the short-term time frames, look for a buy signal. If we get it, maybe we take it seriously. Check what is going on with the Dixie. If you really want to dig deeper, you look at Forex, like the Euro and the Pound, see what they're doing, which again, as far as I'm concerned, they just want to go down, but they are subject to central banks as well. So who knows what they're going to do? Who knows? The UK is like the ultimate wild card at the moment for for unpredictability. So we can't really rely on any kind of information from central banks. We just have to really play this chart as it is. And at the moment, downside seems more likely, but that can flip very easily if we reclaim these zones and get the buy signals. And again, you know, with the Bollinger Bands on the daily being so tight, I expect that the next move is going to be one of the bigger ones, and that's how it's acted historically in this downtrend. I expect that behavior to continue currently. Right, I am going to leave it with you there. There's not a great deal more to say about it. When I get back from my swimming class with my 2-year-old, if she has a nap, I'll make some more videos, preferably on something like XRP, which is still a bullish setup in waiting for an entry point. So I'll update you all on that. But for the moment, it's basically that simple. But I think we're moving into a really big move, whether it's up or down. And like I say, you know, with the bear markets and the way that they've done in the past, and we've looked at this on, you know, several cycles on the long-term time frames. You know, lows get formed, bottoms get formed. Historically, it seems to be right between November, December. That's where all the bear markets have reached their bottoms. That's also very in keeping with a 4-year market cycle, time cycle. Price, again, we can't, you know, we can't establish exactly where it's going to go, but I would not be surprised at all if we broke down below 12,000 and dipped our toes into the 11,000 area by December. But currently, what we're looking at now, contraction on Bollinger Bands, being below all major moving averages, being below the box of significance, doesn't bode well for further upside unless, of course, we reclaim that zone. Anyway, I'm going to leave it with you there. Nothing more to say about it. I hope you have a nice day, and maybe I'll see you later on. Take it easy.